Welcome to TradeTheMBI.com. This is John's reports for the 14th. Well, we've got a pretty significant decay here going forward from a daily reading. You still have MBI magenta above yellow. A little fade over here on our MBI gray. Blue crossover with the red going in front. Now, even with shorts retracing all the way to 4.9, not going to get a whole lot of serious decay. I mean, we've only in pre-market here already moved back to the ABM yellow and bouncing off that one already. So you can then look at the DOC and we see the separation between green and sign. Just means that it's more difficult now than ever for longs to hold on to things. So it becomes very simple. Of that 41.75, 61% long. Below that, more likely to be short than not. Should we experience too much of a decline in that? It can become problematic, particularly if you get a turnaround at all from the MBI white, but overall, not horrible. But there's just a lot of consideration. Everyone's really nervous about what's going to happen with that CPI print because if it comes in hotter than expected, what's the Fed going to do? They're going to try and cut into that? Please. Just becomes nonsense at that point, and then everyone knows it's a joke. And the only thing the government has is credibility, and when that's completely shot, not that it already hasn't, when you're spending $1 trillion every 3 months in negative spending and still not producing much growth from it, you got problems, and it's starting to expose itself. You're seeing it in retail as well as in even just like consumer usage of restaurants, things like that, where it's becoming so expensive. I mean, some of the costs for simple things, just like going to McDonald's for a meal, through the roof, relative to, regular things that used to be, the idea of fast food and that was cheap, but not so much anymore. And so that's really squeezing a lot of consumers, and that is starting to have its impact. And this is what that over time effect of rates having increased significantly, it's starting to put a squeeze on things. From an NQ standpoint, it's even worse because you almost have that crossover here of the magenta below yellow, and that would definitely be a negative. And that standpoint is just a question of, at this particular stage, with shorts not as strongly active, you don't get as strong a decline. But what you do get is, if longs stop buying, then it becomes its own weight, and gravity usually wants to pull downward. From a treasury standpoint, not even competitive, so you're stuck with few choices. Oil had popped the other day, faded back some of that, but again, that's going to become an interesting one as far as it relates to Russia oil supply. But if there is a significant demand drop from lack of economic activity, you could get an easing there, but that indicates to you that a recession has already begun. So, and this is the problem with inflation, because it can look like there is advanced GDP or even growth in businesses because the inflationary number is higher, but relative to what's actually happened, not a good thing. Euro, definitely positive on that with the potential weakening of the dollar. But if inflation comes in hotter and they know the Fed's not going to do anything, the euro is going to suffer to that one as well. Gold took a little respite right there, but again, the trajectory is not the same. I mean, this is just a massive push to try and keep gold lower. But even despite that, I mean, look at that massive short move here, and still didn't even move. And that's just an indication of the demand for gold. And even from crypto standpoint, we had a big move in Bitcoin the other day, but it's faded off most of that already. It's going to be a back and forth when it comes to crypto. I think commodities are still going to end up being the strongest suit because they're the most reliable, and you still have the regulation issue with regard to crypto, but nonetheless, still an alternative to strong decaying markets are definitely going to result in a lot of movement as far as money goes. And here you can see from a 50K standpoint, we broke down into this weakness here once we had that crossover, as I was talking about. With the MBI white spike, we expect to move there at least to the 50%. Already happened intraday, so that was not a shock there. But the bullishness had continued yesterday and then began to fade as soon as that MBI white took the lead. And it was a natural spin-off from there. And fine, the MBI magenta is still holding on, but may not last for very long. So we'll see how that plays out. But at the end of the day, this is where we start to see the cracks uh, in support and whether or not people want to apply even more money to the situation as things continue to grow more uncertain. Some may just feel that cash is a better place to be. When you look at it from intraday, pre-market had been nice, and then it just started decaying from there, and then moved all the way back up to not too negative from that standpoint, and then back and forth. It's been the case from a intraday reading, but we've had this huge turnaround from the depths in the post market here. And you can see some of the erratic nature of what's happening here just before market open. So that's the long and the short of it. I think things are going to get a lot more interesting. We're expecting volatility to start skyrocketing, and now's the time where that's going to begin. So it's going to be a fun one. Enjoy. If anything relevant happens, I'll put it on Skype chat. Have a good one.